Series, and she says if you look at the big picture, especially the job market, there is cause for optimism.
Companies are still struggling to find labor. So even though someone like a Meta, has gone through layoffs in the past, probably a little overstaffed and just taking that down to normal. And those comments, though, do put fear into the market that we don't think is supported by the real action of companies.
Southwest Airlines is slowing growth plans for next year to better match moderating travel demand. This morning, we got earnings from Hertz Global Holdings. It missed profit estimates as it grapples with a higher depreciation cost for its vehicles, which were unusually low in 2022. Hertz shares are down now by 11%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Carol Massar, Tim Stanovic live at Schwab Impact 2023 here in Philadelphia. And we just heard Charlie wrapping up the markets right now, but the S&P 500 still headed toward its lowest since May, gauge briefly crossing the threshold of a correction, down 10% from its July peak. So I'm curious what Jeff Kleintap has to say about all of this. He's Chief Global Investment Strategist at Charles Schwab, and he's here with us on site. It's good to see you. It's been a while.
Thanks for having me. Yeah, it's great to be back.
So what do you make about, I don't know whether it's smart to ever look at one day given day of trade or really think about kind of where we are from the summer. Like, how do you look at it?
There have been a lot of days like this, Carol, though. That's what I'll say recently.
Well, and this is a wacky one where we got aggressive growth data, backward looking, and then yields moved lower. So how do you look at it?
Yeah, they came down, and
way?
those Magnificent Seven stocks weren't so magnificent today. They were the Keystone Cops, I guess, just tripping over themselves. And I think that's one of the interesting things I've noticed, particularly in recent months, but really over the last year, the average international stock is outperforming the average U.S. stock. So if we look at the equal-weighted benchmarks, the equal-weighted EFI index, outperforming the equal-weighted S&P 500. And I think because it doesn't have those Magnificent Seven stocks in it, but also because they're more value-oriented, right? Lower valuations. But interestingly, in the third quarter, what do we get today? We got really strong U.S. economic data. Not true in Europe. Germany's probably in its fourth quarter of negative economic growth. But that's what central banks want to see. And so, we're seeing probably a clearer path to rate cuts overseas than in the U.S. I think that's favoring those equities.
All right, so wait a minute, though. So it feels more dire overseas, right, in terms of the economy?
Economically.
So, right, economically. So it makes sense that those stocks are under more pressure versus what we're seeing in the U.S., no?
Well, what I'm saying is they're outperforming on an equal-weighted basis in almost every sector, which is counterintuitive,
right?
Looking at the economic and earnings picture, but they're undervalued, and I think looking forward to rate cuts next year.
Outperforming, undervalued.
So essentially they're ahead of us when it comes to rate cuts from their own central banks, and perhaps that's why we're seeing, in your opinion, opportunity there?
Yeah, I think so. I think that's where I want to be focused for next year. And there are a couple different reasons. One, valuations. They're braced for a more difficult environment. I really do think we're going to see a turn down in the job environment. There's so many leading indicators of a softening in the labor market. I think we're starting to beginning to see that. And I don't think the U.S. markets are as well positioned for that than overseas.
We did just hear from Mark Bitzer, the CEO of Whirlpool, who said, we're not at the same place we were when it comes to employees over the last 2 years. I mean, raises aren't the same.
Right.
It's not as difficult to get them as they've been. But still, I mean, look at, Jeff, the data that we get each week when it comes to the jobs market, and then each month. We're still adding more than 200,000 jobs a month in the U.S.
Yeah, it's interesting. I think there's a bit of a lag, and what we're seeing is, credit conditions tightening, banks are tightening lending standards. We're hearing more from CEOs that we moved out of a labor shortage environment to maybe a labor glut. Maybe that's overstated.
I haven't heard about a glut yet.
But they've talked more about, just tracking the number of mentions of layoffs or headcount reductions or euphemisms for layoffs versus those for hiring in recent quarters has really started to pick up. And we're now seeing more layoff announcements than hiring discussions or talking about jobs being difficult to fill. I think that's the start of a turn here that we may see towards the end of the quarter.
I will say our Bloomberg economics team, I was just looking through my notes, the surge in continuing unemployment insurance claims indicates workers are finding it increasingly difficult to find new jobs. So if you start to parse through, as just the CEO of Whirlpool said, go below the headlines, you start to see some weak points. All right, so, okay. So I want to go back to international. So if they are outperforming, even though their economy is underperforming, are investors there already factoring good news or good news to come at some point? Because they're starting to kind of trade on what their expectations of kind of where things go. I'm trying to get an idea of as being a forward-looking market.
Yeah, that's a good way to put it. Rampant pessimism in Europe. We've got a war, recession. beginning to turn around, some signs of improvement. Some
Right.
of it tied to China's economic growth, actually showing some signs of improving. I like to watch air pollution in China. That's been on the rise for a couple of months now.
That's depressing. But that's like good news for you.
No, it's good news. It's
I'm
very
just going to
sad.
throw that out
It's like
there.
a hedge fund, right? Like what the different metrics you watch. Yeah.
But sort of the Magnificent Four in Europe are luxury goods stocks, and they benefit from a stronger Chinese consumer. So they're already starting to price in that turn as
But
well.
we've had a mixed bag with some of the luxury guys.
We have. I mean, I think it's early to count on that, but I think they're beginning to price in a better 2024.
So you're saying if you have new money to put to work, you would go to Europe?
I would.
You would go to Europe.
Yeah.
And so what's your exposure to the U.S.? Like how much have you scaled back? I'm assuming you would still suggest some position to the United States.
Look, people
or
ask
are you
me
saying no?
what the right allocation is
Yeah.
to international versus U.S., and I'm just saying more international than you have now. It's been 15 years. It's probably time to reconsider that and rebalance back into it. So I think almost any exposure is going to benefit a portfolio.
Okay.
That's interesting because,
Yeah.
sorry, go ahead, Carol.
Well, but then I want to get an idea of like what would you say in terms of the U.S. exposure?
You know, I worry a little bit more about the very narrow U.S. market. So I think if you can get away from those, the 30% of the market, the Magnificent Seven, I think the market's looking better. But
Yeah.
I would favor energy and financials in the U.S., which are where you can find the more attractive values and the stronger cash flow, which I think is going to be king in 2024.
All right, so you're not going to say 30% U.S.
I mean, I think it's
I know it's all individual, but I'm just trying to get an
Yeah.
idea of how aggressive you are saying Europe versus or outside U.S. versus U.S.
I mean, I think you could look at it in the way you might look at the all country world index, right?
Yeah.
Which is like 60% U.S. and 40% international. I don't think that's a bad allocation.
Okay.
What would you
interesting.
say to someone who would push back on you and say, wait a second, if you look at the stocks in the S&P
I believe
500...
they say, wait a second.
Wait a second. So many of the stocks in the S&P 500 have huge exposure internationally. I mean, especially those big,
Yeah.
big ones like Apple. The majority of its revenue comes from outside of the U.S., for example.
There are huge international companies that have a lot of U.S. revenue. So I think what it really comes down to is where is the investor base? For example, Nestle, I think, is the second largest stock in the EFI index. Compare that to Coca-Cola. They sell beverages and snacks to literally the same people around the world. Their revenue growth is almost exactly the same every year, but one trades 3 or 4 multiple points above the other. Coca-Cola. Why? Because 80% of Coke's investors are U.S.-based. About 80% of Nestle's investors are European-based. And again, recession, war, their pessimism is giving you a cheaper valuation. I think those converge.
It's an opportunity, you're saying.
Opportunity.
Okay.
How confident do you feel about making calls right now?
Well,
Because you even have like the Federal Reserve, you have Jay Powell talk about, listen, there's multiple, the idea in terms of what kind of scenarios could come, why, I forget how he said it, but there's a lot out there in terms of how we could move from here globally in markets in the economy. Obviously, his focus is on the U.S. So I think the thinking was like, all right, so how confident does he feel about making forecasts? How confident do you feel at this point?
I think that benefits a broader allocation rather than a concentrated one,
Okay.
right? When you're super confident in an outcome, you can concentrate. I think now broader global asset allocation makes even more sense in a more uncertain world.
Yeah. When's the last time you made that kind of call?
Oh gosh, so we liked international in the 2000s, right? In
Yeah.
the 2010s,
It's a long time.
we were in a different cycle where interest rates were so low, borrowing was so cheap. Now you want cash-rich companies, you're going to find more of those overseas.
China. You like China too?
China's a tougher call. I do think the economy is improving, but geopolitical risk is such a wild card over there, and the stocks can swing 60% on, up or down. We've even seen that this year.
Is that a no?
I'm more confident in developed markets than
Come
emerging.
on, Jeff.
Okay, well, here's the developed market that's close to home, the U.S. Are we headed into a recession, or are we in a recession already?
I think we are in a cardboard box recession. Manufacturing and trade are in a recession, things we put in a box. If you can't put it in a box, it's not in a recession. I live 3 miles from Walt Disney World. There's no recession at Space Mountain right now. And so I'm a little worried that services slide into a recession and meet where manufacturing is rather than a rapid rebound in manufacturing. So I'm on a watch for that next year.
Jeff, what do you think? We've got 30 seconds left. What every investor should be asking themselves at this point, now.
I think asking themselves about their allocation international. I'm going to come back to this because when international's in favor, it tends to outperform 500-600 basis points a year. That's important to stay on track to your financial
I have
goals.
to say, when I started, I felt like we used to talk about international investing so much more, and our global investing, including the whatever, but it's just interesting how it's gone kind of to the wayside.
Yeah, time to
With
reconsider.
good reason, maybe. But maybe it's a different environment. Jeff, thank you so much.
My pleasure. Thanks for having me.
Really fun. Jeff Kleintop, Chief Global Investment Strategist at Charles Schwab, obviously on site with us here in Philadelphia at Schwab Impact 2023. A lot going on. Carol Master, Tim Stanovic, a lot more interviews to come actually from this event.
Aaron Hema-Parmar are coming out with a story just now. Steve Cohen says the U.S. economy may fall into a short-lived recession this year before rebounding the first quarter of next.
Everybody's got a view. All right, right now let's get a check on the world and national view. For that, we head over to Nancy Lyons. She's in D.C. Hey, Nance.
Thanks, Carol. Israel says it has killed the deputy head of Hamas intelligence, who it says was responsible for planning the October 7th attack. The military says Shadi Baroud was killed in an airstrike earlier today. As for the hostages still being held in Gaza, President Biden is concerned about their fate if Israel conducts a full ground invasion. So he's asked Israel to hold off for now. As Bloomberg's Nathan Hager reports, Israel may be using controversial methods to try to track down those hostages.
Israel's security services are pulling in help from NSO Group and Candiru, spyware makers that are blacklisted in the U.S., to upgrade their capabilities and help monitor the captives' movements. That's what Bloomberg News is hearing from 4 sources in the cyber industry and an Israeli government official. NSO makes the Pegasus software that's been sold to governments around the world to hack into cell phones. Sources tell us the software firms now offering their services to Israeli security are largely doing it for free. In Washington, I'm Nathan Hager, Bloomberg Radio.
We're learning more about the deal reached between the United Auto Workers and Ford. Workers will see a 25% pay hike over the life of the 4-year deal, with pay eventually reaching $40 an hour. Bloomberg's auto reporter in Detroit, Keith Naughton, explains what Union President Shawn Fain was not able to get.
He did not get the 32-hour work week or the 4-day work week. He did not get a return to traditional pensions. What he got instead is a larger contribution from the company to your 401k or to your pension. It's the workers hired in the last 15 years that are going to have a greater contribution.
Bloomberg's auto reporter Keith Naughton. A massive manhunt continues near Lewiston, Maine, where a U.S. Army reservist allegedly walked into a bowling alley and bar overnight and killed 18, wounded 13. Global news 24 hours a day and whenever you want it with Bloomberg News Now.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. Late day fade. We have got the Dow, the S&P, NASDAQ, all very much in the red. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shaw. That's right. U.S. stocks are under pressure right now, with the Dow currently down 202 points. S&P's dropped 47, while NASDAQ is down by 1.7%. The U.S. 10-year yield at 4.85%. Gold is up 4. Oil trading in the red, and Bitcoin is down by 2%. Among the main 11 S&P sectors, leaders were real estate and the materials. Telecom and tech were under pressure, and leaders to the upside in the Dow, IBM, Merck, and Verizon, while Nike, Apple, and Visa led to the downside. Note that Apple is trading below its 200-day moving average for the first time since March. After earnings, tobacco name Altria fell as much as 8.3% to its lowest level since 2020. It now yields 9.9%. Align Technologies plunged 25%, and Hasbro fell by 11%. Wrapping things up, some of the names reporting after the bell tonight include Chipotle, Amazon, Intel, and Ford. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, Bill Maloney, and we'll be all over those numbers as they break into here live. Breaking news over your Bloomberg. Type Squawk SQUA on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody. Just under 18 minutes left in today's trading session, getting ready to wrap up the Thursday trade. We've got stocks taking another leg down, still off their worst levels of the session, as you heard from Charlie Pellet, but still down 1.7% on the NASDAQ, down about 1.1% on the S&P 500, 41.39 on that S&P. So much going on in the market environment, and we've got a great guest. Chloe Berry is Managing Director and Head of the Infrastructure Income Strategy over at Brookfield Asset Management, a firm very well known to our audience, of course, run by Bruce Flatt, and she joins us here at Schwab Impact. Welcome. So nice to have you.
Thank you. It's great to be here.
Tell us about your world and how you think about the environment that's out there in a day where, we get a hot GDP report and yet yields go down. Things don't always make sense, and we're trying to read the tea leaves. So tell us how you guys see it.
Yeah, so look, in infrastructure, the beautiful thing about infrastructure is that it's really an asset class for all cycles, right? So current environment only plays a small part in what we're looking for, because infrastructure are essential assets. They're the backbone of the global economy. They're, with electricity transmission lines powering the buildings we're sitting in. It's the telecom towers, pinging the signal for this call, or the, data centers housing our photos. And so these are essential assets with long-term contracted revenues, inflation linkage, and downside protection through these stable cash flows. And so infrastructure is really like what we like to say is an asset class for all cycles. And so we don't have to predict what's going to happen tomorrow to have a stable, predictable cash flow stream.
To what extent do you watch government spending around the world affecting your asset class?
Yeah, so it's a really good question, because so much is going on in that right now, right? We've seen the Inflation Reduction Act, the CHIPS Act, the Infrastructure and Jobs Act. It's all positive. We love people talking about infrastructure. They should be talking about infrastructure. We need to modernize our infrastructure. And so it's great that it's more of a household topic. And all that influx of capital, all the incentives that the government is putting, multiple governments are putting really into the infrastructure sector, is really a tailwind. We at Brookfield, we don't rely on those, to make an economic return on our investments, but they are huge tailwinds for the sector.
But one challenge with rising interest rates, of course, is also the deficit. And there's a concern, too, that Washington might pull back on some of the spending as a result of rising rates and as a result of, look, there's no other way to put it, but disagreements between Democrats and Republicans. Things are pretty fractured even within parties as we speak. How does that concern you?
So again, we're not relying on, the government programs to earn our return that we're looking, down to it. We are economic investors looking for a return, and we don't rely on that. It's helpful, but really we're looking, for assets that withstand that, and I think just more generally, it's the interest rate environment and capitalized, or I should say, more constrained balance sheets, whether that's governments or corporates, right, that are trying to delever in this environment. That creates opportunity for us because we're private capital investors, and there's a huge deficit in what these governments and corporates who have traditionally funded infrastructure can spend in today's market relative to the trillions of dollars that needs to be spent to upgrade our infrastructure. And so we play a really critical role, and opportunities are opening all the time because of that.
Where are more opportunities, public or private infrastructure?
So we're predominantly private market infrastructure, right? But we see opportunity in the public markets to take assets or companies private. What that really allows us to do is take a longer term view on the asset, right? We're not subject to the whim of the market and the shareholders on any one day or what is the sentiment of that day. We can drive value and really long-term compounded growth over significant periods of time instead of making decisions based on really what's on vogue today.
Well, and I do wonder what expands or reduces maybe the expected timeline for returns for your investors, right? You guys do these massive fundraisers, and I think is it $100 billion 2023, your goal? Is it going to happen?
So look, infrastructure, I think that number is across Brookfield more broadly.
Okay.
In the infrastructure space, look, we're raising huge amounts of capital.
And it's still coming in.
It's still coming in. Look, capital is more constrained than it has been in the past, but infrastructure assets are what people are looking for today. Inflation linkage, right? So topical. Maybe we're peaked on inflation, but it's still high.
Right.
Interest rate protection, rates all the higher for longer, all that sentiment. These are assets that can be financed with long-term fixed rate debt. And so the assets are protected from that interest rate environment. And when we buy new assets, we're pricing that in to the assets that we're buying.
What would you say, Chloe, are the most interesting assets out there when it comes to infrastructure investing that you guys are just really keen on? You're known for, certain trends and plays, but what is it in particular?
So we like to talk about what we call the 3 Ds. And this is decarbonization, deglobalization, and digitalization. And so really this is about decarbonization. It's everything from more renewable power generation. Of course, that's an obvious one, but it's going beyond that. It's building out electricity transmission lines to connect that renewable power to population centers or to the grids. And it's in our homes. It's residential infrastructure, solar, rooftop solar panels, heat pumps, generators, EV charging stations.
What about nuclear?
So nuclear, where we like to play in nuclear is on nuclear services. Right, so nuclear generation itself is often done by governments or government utilities because
big projects.
So this is again where public drives it, but you guys find opportunities.
We will service it and be around the ancillary, but we will not generate the nuclear power.
Where do you lie on that in terms of do you believe more of that will happen in the U.S. or are those projects too big and too daunting for local governments to take on? Just in the last 30 seconds that we have.
So we believe that nuclear will play a critical role in decarbonizing our environment and really, energizing the world of the future. It's really critical for that baseload power.
Even in the U.S.?
Yes.
Really? Do you see signs of it?
Look, there's opportunities kind of around the world where we're seeing it. We just looked at in Poland and got some opportunities there. Geopolitical concerns around the world, that's really driving, onshoring of critical industries and energy security. And so, could it happen? Yeah, I think so.
Really interesting. Chloe, thank you so much.
We love infrastructure.
Come back.
So do we.
Come back in New York. Come back and join us. We do love it, infrastructure. Chloe Berry, she's Managing Director and Head of the Infrastructure Income Strategy over at Brookfield Asset Management, joining us here live in Philadelphia at Schwab Impact 2023. Folks, we've just got about 10 minutes left in today's trading session. We've got the close coming your way in just a moment, right here on Bloomberg.
listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just got about 7 minutes left in today's trading session. A lot going on, certainly. We're still live here in Philadelphia at Schwab Impact 2023. We'll get back to some interviews in a moment, but back home, downtown New York City, Sam Bankman-Fried was up on the...
I think we can call it the stand.
The stand.
Maybe, I don't know. There's some really weird technical stuff here. I have lots of questions for our next guest.
He's definitely in a New York courtroom.
He's in a New York courtroom,
giving testimony.
Yes.
But the jurors are not there. It's very confusing for lay people.
So let's get to it. Let's get the latest on what was going on. Bloomberg legal analyst and host of Bloomberg Law nightly on Bloomberg Radio is June Grosso. She's back there at Bloomberg headquarters. June, help us make sense. So what happened
he
today?
did get on the stand to start to testify, and then the judge said, let me back up for a little so you explain this, because it is all about a legal ruling. So before the trial started, the judge issued a lot of rulings that were against Sam Bankman-Fried, and one that was very much hurtful to his defense is that his defense was going to argue advice of counsel, that he did what he did because his lawyers advised him to do it. And the judge said, no, you can't raise that in opening statements because it'll be too confusing for the jury. But if you want to raise it later on, bring it up with me. So last night, they brought it up with him. They said, we want to raise the defense that he relied on his lawyers. And so today the judge said, well, before I rule on that, I'm going to have to hear from Sam Bankman-Fried about what he would testify to regarding that. So that's what this testimony is. So he dismissed the jury, said come back tomorrow, and now he's listening to Sam Bankman-Fried talk about various things, and I wrote them down because I don't really know these sort of technical things. FTX's use of auto-deletion policies for Signal and Slack messages, the opening of North Dimension and its bank accounts, loans made from FTX and Alameda Research to its executives and others. The prosecutors have argued that some or all of those issues were proof of criminal intent. The defense is saying, no, they're not proof of criminal intent. He relied on his lawyers. So they're going, generally for a good faith defense, sort of the kind that failed Elizabeth Holmes.
So, June, what happens?
Is that understandable?
Yeah, no, totally.
Okay. No. No.
All right, I'll go for it again. Let me try again.
What happens? Well, June, what happens though if the judge hears from Sam Bankman-Fried, and then when later he goes to testify in front of jurors, let's say he's cleared to testify in front of jurors, what happens if he doesn't stick to what he told the judge and brings in other stuff?
Well, that would be problematic for him because he's also being cross-examined by the prosecution, and they would bring that up. But I think the kinds of things he's talking about now, and also remember, they have to have prepped him a great deal, though I don't think any amount of prep is going to help him survive a cross-examination when they have so much against him. But at this point, I don't know football, but I think they call it a Hail Mary pass. What can he lose at this point?
Okay.
The testimony has been so overwhelming against him, not only physical testimony, not only documents and spreadsheets, but 3 witnesses we've talked about, former girlfriend and former lifelong friends who testified against him, and the defense wasn't really able to make many inroads in it. There was not a moment where it was like, oh, this is why you're testifying. It was little things here and there, and the basic thing that defense attorneys always do with witnesses who flip, which is, well, you flipped, you're testifying to this, and you're saying this because you want to get a better deal with prosecutors. That was the best they had on cross, so now it's up to Sam Bankman-Fried to try to get one juror, perhaps, to believe him. That's all he needs to have a mistrial.
That's all he needs. Unbelievable. Fascinating. Reads like a Netflix series, but it's reality.
I bet
folks.
there will
all
be
right,
one.
June Grosso.
Another.
June Grosso. Hey, we have a documentary on it. We're going to talk about that later. June Grosso, thank you so much. Back at Bloomberg headquarters. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:58 on Wall Street, minutes away from the closing bell with the Dow, the S&P, NASDAQ, all well in the red right now. We have got the S&P down 47 points. That is a drop now of 1.1%. Dow Jones Industrial Average ahead of the close down 242 points, a decline there of 0.7%. The NASDAQ Composite Index now down 218, a drop right now of 1.7%. 10-year yield 4.83% with a 2-year that's now yielding 5.03%. Gold up $5 the ounce to $19.84, up by about 0.3%, while West Texas Intermediate crude oil is trading lower by 2.8%. We've got WTI at 83.45 a barrel on West Texas Intermediate crude. Gross domestic product accelerated to a 4.9% annualized rate, more than double the second quarter pace. So where might that leave the Federal Reserve? Winnie Caesars, global head of strategy at Credit Sites. She was interviewed on Bloomberg.
The economic data in the U.S. has been quite resilient as of late. We've seen a very strong Q3 GDP print, along with some durable goods and initial jobless claims that came in a little bit better than expected. Now, there is something for everyone with some of the pricing data, and we do have the PCE read tomorrow for September, which will be quite important as well. But we do think that we'll have a more hawkish hold from the Fed next week.
And you can hear more of that conversation on the Surveillance Podcast. There you have it, sound of the closing bell at the New York Stock Exchange as we wrap up trading on this GDP and Amazon Thursday. S&P at the close down 51 points, a drop there of 1.2%. Dow Industrials down 251, decline right now of 0.8%. The NASDAQ Composite Index down 225, a decline of 1.8%. We are awaiting the latest numbers out of Intel, Amazon, and Chipotle. Amazon shares today did decline by 1.3%. So again, recapping, S&P lowest close since May. The Dow, the S&P, NASDAQ all finishing very much in the red. S&P down 49, a drop there of 1.2%. 10-year yield 4.84%, with a 2-year yielding 5.04%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stenovic, live at Schwab Impact 2023. More interviews to come from our team here in Philadelphia in just a moment. We are keeping a watch for Amazon in earnings, as Charlie mentioned, Intel, Ford, Chipotle, all after the closing bell. We're also going to hear from Mattel Chairman and CEO Ynon Kreiz in just a moment. Amazon, though, just crossing the Bloomberg. Let's get to the numbers.
Yeah, third quarter net sales beating estimates. Net sales are coming in $143.08 billion. Estimates were for $141.56 billion. AWS net sales coming in just below estimates at $23.06 billion. Estimates were for $23.13 billion. Amazon's operating margin coming in above estimates, 7.8% versus estimates of 5.46%. And then here's the number for the fourth quarter sales, Carol. Amazon seeing fourth quarter net sales 160 to 167 billion. Estimates were for 166, so kind of the lower end of the range there.
Yeah, just taking a look at Amazon here in the aftermarket as I pull it up here on the Bloomberg, because that number looks like it is
bouncing around a bit, but about 1.5% higher right now.
Yeah, it is bouncing around. It's a little bit lower, so I think investors trying to make sense of it here. We do want to bring in Abigail Doolittle, Bloomberg News market reporter, who's back there at Bloomberg headquarters. Abigail, obviously we have today's trade, and now we're focused on earnings. Right now I'm looking at Amazon up about 2.8% here in the aftermarket following their earnings. Give us your thoughts on the trade today as we continue to watch Amazon here in the aftermarket.
Sure, and Amazon, I think investors and traders are really still trying to figure out whether it's good or bad. It's been flipping around right now, to your point, up 2%, but it was down slightly. And as I look at these numbers, it looks like sort of just in line, maybe a little bit of a miss here and there. So I'm going to be interested to see why, what it is exactly that investors are digging in on that's causing it to go higher. And I'll be reading those headlines. And this is against the backdrop, and this could be a piece of a relief that it's not worse than it is, because we, of course, have the S&P 500 down 1.2%, the NASDAQ down 1.9%, down for a second day in a row on those Meta earnings. Actually, the earnings were report, as you both know, it was actually pretty solid, but it was the color, the look forward, the idea that advertising spending in next year could be a little bit weaker on the macro concerns and the uncertainty that sent that stock down. Alphabet had been down so much 2 days ago on the weak cloud, down for a second day, not getting a bounce back. That's a fancy way of saying that the New York FANG index down nearly 3%, and all of this putting the NASDAQ 100 into a correction. So right now, just taking another look at Amazon, investors like it. The stock is continuing to trade higher, up 3.8%, and maybe it is just the pure 3Q net sales beat a piece of it. The cloud, even though it looks a little bit like what I'm looking at, the AWS net sales 23.06 versus 23.13. It's small in terms of the operating margin. That's probably what investors really like a lot too. 7.8% versus the estimate of 5.5%. This company is known for sacrificing profit and margins when they want to invest. They didn't do that, and investors probably like that conservative stance.
That's like old school Amazon,
Yes.
years and years of not making profits,
Yes.
just making investments. Abigail, speaking of making investments, Amazon to hire 250,000 seasonal employees in the U.S. And speaking of other investments, third quarter 2023 gain from investment in Rivian is also being highlighted in this quarter. I want to take a step back, though, and get your thoughts on the S&P 500, Abigail, and what you're seeing when it comes to technicals, because we closed today below 2150. We closed at 4150. We closed below at 4137 today. What are your thoughts on the technicals here?
It doesn't look so great, truthfully. I mean, there's no real way to make this picture look pretty, and I'm going to bring in the Russell 2000. We've been talking about it for weeks. The Russell 2000 almost in a bear market, down about 18%, well below its 200-day moving average. The S&P 500 has been rustling tug of war with its 200-day moving average over the last week or so. Yesterday, decisively below it. Today, decisively below it. Not yet in a correction, close to it, but again, the NASDAQ 100 is. Most signs point to lower, and it's really interesting because we've had this micro picture weigh on these indexes even ahead of the Fed. I mean, at the end of the day, in my view, it's always going to be the Fed, and if they continue to signal, which there's every reason to think that they will, that they're very comfortable kind of hanging out higher for longer, even if that doesn't mean a hike. That, of course, puts pressure on risk assets because it takes liquidity out of the system. And then you add in the geopolitical tensions, and there's a lot for stocks to worry about it. And it's not the traditional climbing the wall of worry. We obviously are not climbing the wall of worry. We're sliding down. We're not taking the elevator yet, but back to your question around the technicals look like the elevator could be coming into play soon, which means a fast drop.
All right, continuing to watch Amazon, still up, about 4 or 5% here in the aftermarket.
4.3%.
We care about a name like this because it's about 3.1% of the S&P 500. It's a bigger weighting in the NASDAQ 100, about 5.2% and 6% of the NASDAQ overall. So in terms of the impact, it definitely matters. Another headline, crossing Ford withdrawing its full-year guidance. So that's kind of interesting, and it probably has something to do with the strike.
Yes.
We saw General Motors do something similar earlier this week.
So not surprising.
But still,
to see
shares
that.
of Ford down 4.5%, bouncing around down 3.9% in the down 3% in the after hours, I should say.
Yeah, continuing to feel the impact. Again, Amazon, mixed results. I'm looking at Spencer Soper on our live blog. Revenue and earnings beat guidance, and Amazon Web Services revenue missing slightly. Abigail, before we let you go, some final thoughts, and as you think about tomorrow's trade, in terms of how it maybe potentially trades off as Amazon. It's an important company. It's an important stock. It moves the market.
It certainly does. And I'm gratified to hear one of our colleagues saying that's a mixed quarter, because I was thinking to myself, what am I missing here? It doesn't look that great to me. It actually looks less solid than Meta's quarter. It's going to really be interesting what kind of color they give on their call. I think that one thing that investors are hanging their hat on is that operating margin beat. That's pretty solid. They seem to be looking past the slight cloud miss, coming off the highs, down up one. It's now it's slipping. It's up 1%, slipping from its highs, I should say. I wouldn't be surprised if we see this thing reverse quickly. And I think the big takeaway this week is that the big tech names that are up so much this year, they haven't put up quite enough for the third quarter to keep those gains going. And you put that in against a rising rate backdrop, and creates declines for stocks overall.
I was thinking the same thing, right? They weren't necessarily all positive or all negative or one company alone. It was very much mixed, and it was hard for investors to kind of figure it out. Abigail, so appreciate your overall take on the market, and then also squeezing in what we're seeing in Amazon. We're going to stay with Amazon for just a moment since the stock continues to move higher in the after hours, now up about 3.3%. Carmen Reinecke is Bloomberg News equities reporter. She is on the phone in our New York City bureau. Carmen, what are you seeing in these Amazon results that you think our audience needs to know about?
Yeah, so really the big number that everyone, at least we were watching here, was that AWS net sales figure. It was a slight miss, but investors seem to be overlooking that. You know, the stock jumped as much as 5.7% in the after hours period. Now it's down a little bit from that, up about 3.5%. So it seems like, you know, the top line, the net sales beat for the third quarter is enough, at least right now, for investors to stay excited about Amazon's results. I mean, obviously that could change. We'll see what they say on their earnings call. But right now, things are looking pretty okay.
Yeah, an important caveat always, of course, is, these numbers are just numbers before the call. We always have to wait until we hear from management on that call. But Carmen, I'm confused because I thought Amazon was all about the cloud. I thought that's what, that's what investors wanted to see.
That was yesterday's story, apparently.
I guess it was
really
yesterday's story.
Yeah.
AWS Nets, yeah. So why are investors overlooking this?
I think we still need to see a little bit more about like what's going to play out. Obviously, after both Google and Microsoft's results, we really thought all eyes were on cloud, and that really has been the biggest thing for Amazon. I guess the miss was very slight, and it did show that there was growth year over year. I mean, that's something that could be important here. Investors might be saying, okay, well, it's a miss, but it's pretty close. It might be showing that there is some acceleration from sort of the bottoming that they saw in the second quarter. So, looking at the sort of move back to growth might be enough to sort of garner excitement here. And yeah, as we said before, what happens on the call is going to be really important. And I think what they say about cloud and what they're seeing in that unit is going to be like particularly, important.
Andy Jassy, in the press release, we said we had a strong third quarter. Our cost to serve and speed of delivery in our stores business took another step forward. Our AW growth continued to stabilize. Our advertising revenue grew robustly, and overall operating income and free cash flow rose significantly. So just kind of looking for some commentary. Carmen, we so appreciate you weighing in on it and just tracking Amazon for us here in the aftermarket. We got to switch to Intel.
Yeah, shares of Intel are surging right now. Intel seeing fourth quarter adjusted revenue coming in between $14.6 billion and $15.6 billion. That is above estimates of $14.35 billion. Also, fourth quarter adjusted EPS is above estimates, Carol. So we're seeing the stock move more than 6% in the after hours.
All right, so watching the earnings, we'll continue to bring them as they cross the Bloomberg. But we do want to, we know earnings certainly front and center right now, especially in the blackout period as we wait for the next Fed meeting. Having said that, one of the things we continue to talk about here at Schwab Impact 2023 is all about the fixed income market. Higher for longer rate environment. We heard Janet Yellen, former Fed official, head of the Fed, obviously, U.S. Treasury Secretary, making some comments. Well, it continues to be top of mind for investors. And what's interesting is Schwab has actually done, Schwab Asset Management, a survey specifically on ETFs. They do it, an annually survey, and it's called ETFs and Beyond. So we want to bring in David Botzett to talk about it. He's head of equity product management at Schwab Asset Management with us in Philadelphia. I'm stumbling through because I want to get to you. There's a lot going on. This is our world, so forgive. We're going to watch earnings and bring them to our audience. But you guys did do a survey about millennials and ETFs. Tell us about that and what you found.
Yes, so this is a survey we've been doing for over a decade. So not only do we get great results this year, but we can compare it to past years. And one of the things we're seeing, you mentioned fixed income, is the increased interest and familiarity with fixed income ETFs. And millennials in particular using more fixed income in their portfolios than what we're seeing from Gen X or baby boomers.
I mean, is there anything hotter out there right now than TLT?
Yeah, there isn't.
Okay, that's what I thought. Let's just get right to it here. Yeah, even though losses, anyone who's invested in TLT this year has just gotten hammered.
They have, but you're really thinking about the future. You mentioned the Fed. Where are they going? Are they stopping? We're on the precipice of perhaps a pause. we're closer to the top. We don't know if it's the top, but I think they're looking at where do I position my portfolio for what comes next.
So when the millennials start talking about fixed income, is it just mean that the era is over and that it's time to... Sorry, millennial.
You're saying it's peak?
I'm saying have we hit the peak? No, I do wonder. Like, how do you guys read and interpret that?
You know, when we think about what the millennials have gone through, think about the great financial crisis. You know, some of the older millennials have hit the tech boom and bust. They've seen what their parents have experienced, and in some cases we believe they're a little bit more conservative with their allocations than what we're seeing with the older generation.
They are conservative. You know, it's funny. I was listening to, I think, the team on surveillance, or maybe it was Paul and Matt on markets today. But this whole idea of you have this generation, the millennial generation, that came out of the crisis.
Yep.
That was really rough. They saw maybe the impact on their parents. They saw themselves if they were entering the job market, not easy. And then to see kind of coming out of the pandemic.
Do you want me to keep going? Student loan debt.
Yeah, I know.
It's just been crippling
You're
for us.
pretty bummed out, right?
Yeah, like, I mean, you know, then you try to buy your first house, and then mortgage rates at 8%.
Well,
things have been pretty great.
But let's look at the flip side. Suddenly, income is part of fixed income investing again. So we're out of a zero interest rate environment. You're looking at duration, you know, intermediate term, 5-6%, depending on where you're going. So it's a much more attractive opportunity in your portfolio today than it was 2 years ago.
Okay. There's a glass is always half full approach.
I always do wonder what you guys do with like these studies, and like, you know, we've been talking to many members of the Schwab investment team, you know, who are looking at the markets and trying to figure out what goes next. Jeff Kleintop talking about like overseas, like non-US, how maybe it's time to start looking at it. So does it mean that in terms of the thinking and strategy, this whole idea of fixed income, right, that it is going to be a strategy that sticks around a lot longer than everybody maybe anticipated?
Absolutely. So from an asset management standpoint, for Schwab Asset Management, we use this type of data to inform the type of things we want to bring to market.
Right.
You know, earlier this year, we launched the Schwab High Yield ETF. And recently, we reduced the expense ratio to 3 basis points of that product, responding to client needs.
Does it just go to zero eventually?
I don't think it goes to zero.
Is there a race to zero?
I think we're getting very close to the bottom, right? There's always going to be costs that we're going to need to be able to cover for the product, and we're going to need to have an expense ratio that's going to cover those costs.
But that makes it tough, right? You have to be very careful in terms of the pricing.
You have to be very careful, and you've got to price at a level that you're expecting a certain asset level to get to.
You know, one of the things that we keep hearing too, and I feel like we heard it for a while, David, and then I felt like it went away, but this whole idea of personalization in terms of portfolios. Did stuff come out of the survey on that as well?
Yes, it has greatly. So that's one of the questions we ask is about personalization. And when we think about the personalization, we think about it in a couple different ways. One is what type of ETFs investors are using. So using things like thematic ETFs to get exposure to specific areas of the market where they may not want to take the individual stock risk of an Amazon, a Ford, an Intel, right? But they want exposure to that industry very narrowly within their portfolio. So thematic is a play. Other things like ESG is playing forward as well.
Is ESG as attractive or interesting to millennials or others at this point?
Yeah, I think
you know the reckoning, and we all keep talking
Yes.
about where people want to really kind of understand what exactly is ESG, so that when I invest, what is it really doing?
Well, I think that's one thing the industry continues to be challenged with. Everybody defines it in a different way. If we had a common nomenclature that everybody could get behind, it would be much easier.
Does money back off because as a result?
I don't think so.
It's also performance. Like I think when it was a cheap money environment, everything seemed to do well.
It did. But you still look at that differentiation by demographics. The younger generation continually looks at that opportunity, and they want to be closer to investing as their values.
How long do you think we're going to be in a high rate environment?
Oh, boy.
If he knew, he would not be talking to us right now.
He would still be hanging out with us. We're cool. We talk about TLT. We talk about new ETFs.
So I don't know how long we'll be in a high rate environment. I sat through a session yesterday, and they asked the group of RIAs that were in the room, how many of them thought interest rates were going to come down from the Fed in the first half of next year?
Yeah.
I'd say it's probably 10-15% of that audience.
Okay.
They asked about the second half of next year. It was like 90% of the audience. So I think it's telling from the community and from the professionals we have at this conference what their view is.
Yeah, but remember, was it earlier this year that if you had done that, you probably would have got the same response? Like when the regional bank crisis.
That is very
and so
true.
forth?
Very true.
It's just been a tricky environment.
It is a very tricky environment. The numbers came out this morning. The U.S. economy much stronger than anticipated. I don't think anybody's necessarily
and yields went
expected.
lower.
Yes.
So it's really fascinating. Great to check in on the survey. Thank you so much. And thanks for your patience as we were going through kind of all of the earnings.
Completely understand. Thanks for the time.
So appreciate it. David, be well. David Bott said he's head of equity product management at Schwab Asset Management on site with us here in Philadelphia. Are you continuing to track? What do you got?
Yeah, Intel stock up more than 7% post-market. The company seeing fourth quarter adjusted EPS coming in at 44 cents, where the consensus was 30 cents.
Yeah, so continue to track. And just keep in mind that these are certainly, I look at something like an Amazon. What's Intel doing?
Well, Intel's up 7%. Amazon's up 2.7%.
So it's come off its highs of the session. All right, don't go anywhere. More to come right from us here at Schwab Impact 2023. This is Bloomberg.
what they say. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. Amazon reporting quarterly revenue that topped analyst estimates, lifted by rising sales in its retail and cloud computing units. After hours, Amazon up now by about 3.7%. Carmen Reinecke covers equities for Bloomberg News. She was interviewed moments ago right here on Bloomberg Business Week.
Seems like, the top line, the net sales beat for the third quarter is enough, at least right now, for investors to stay excited about Amazon's results. I mean, obviously that could change. We'll see what they say on their earnings call. But right now, things are looking pretty okay.
And, of course, we will bring you any headlines from the conference call. Intel surging in late trading, up 6.3% after predicting a return to sales growth in the fourth quarter. Stocks did move lower today. The Dow, the S&P, NASDAQ all declining. 49-point drop in the S&P, down 1.2%. The Dow down 0.8%, negative on the year, down 251 points today. NASDAQ down 1.8%, drop there of 225 points. 10-year yield 4.84% with a 2-year yielding 5.03%. Gold, little changed, up about 0.3%, $19.84 the ounce. West Texas Intermediate crude down 2.1%, $83.60 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. Carol Massar along with Tim Stenovic. Well, Mattel earnings just about 24 hours ago. The toy manufacturing and entertainment company maintaining its full sales outlook, citing some softness in the industry, also a weaker global economy. And despite a strong third quarter beat and the success of the Barbie film, which I personally loved, so did my 20-year-old daughter, analysts expect the muted flow through to the full year outlook to cause some disappointment, which we did certainly see in today's trade. I've got to say, I've already said it to you guys all, it's an interview that I've been looking forward to because I feel like, Mattel has gone through some transformations, but they are, increasingly embracing taking their IP, if you will, and bringing it to life on the big screen, which they did very successfully with Sony in terms of bringing the Barbie movie out. But also they have supply chains they have to deal with. They sell globally. They're coming up on their big season, so it's an interesting time to always talk to an executive like this.
Yeah, Mattel shares finishing down by 7.6%. They did slump as much as 19% earlier in the session. This was after the company maintained its full-year sales outlook. The reason this was a disappointment, Carol, is because of the success of the Barbie movie. A lot of investors and analysts thought, okay, well, if the Barbie movie is so successful, then why is Mattel maintaining its full-year sales outlook, and why aren't we seeing more? So we're going to be speaking in a few minutes with Ynon Kreiz, the CEO of the company. We're going to talk to him all about that, all about IP and the way the company's thinking about IP moving forward, but also something that I know is deeply personal for him, which, of course, is the conflict in Israel right now, the Israel-Hamas war. And Ynon himself, being from Israel, his thoughts around that and leading a company around that.
Absolutely. I do think it's when we are at these times of stress points, we certainly saw it during the pandemic and COVID, that we really lean on global leaders to get a better understanding of kind of where we are and where we need to go as a society and a world. As we said, we're talking about Mattel, and lucky for us, we do have Ynon Kreiz. He is the chairman and CEO of Mattel. He's on Zoom from El Segundo, California. Ynon, okay.
We're having some technical difficulties.
We're just having some technical difficulties, so we're hoping we can get to him. I do want to, as we wait for Ynon, and we're going to talk Mattel, I do want to go back to Amazon because it is certainly one of the big earnings after the closing bell. It is up about 3.4% here in the aftermarket. So many different parts in terms of their business because they have a good check on the consumer, on cloud. What are you seeing, Tim?
Yeah, the company reporting sales for the third quarter that beat estimates. Revenue for the cloud business, though, Carol, it came in slightly less than expected, but operating income beat. What's interesting about that is for years, Amazon was all about the cloud. AWS has been the profit engine of Amazon for years, so it's interesting to see investors sort of shrug that off. We'll be speaking a little bit later in the program with Dan Morgan over at Synovus. I'm curious to get his thoughts on that. Amazon offers an upbeat outlook, though, for the fourth quarter and for holiday shopping, including announcing that it's hiring 250,000 employees in the U.S.
Yeah, exactly. Outlook for operating income in the busy holiday quarter does look promising. Forgive me if you said this, a range of about 7 to 11 billion. Analysts are expecting 8.7 billion. That's a pretty optimistic number.
Sounds like a consumer is consumers buying on Amazon in the fourth quarter, Carol, what does that mean for what the fourth quarter is going to look like for the rest of the retailers? For consumer spending.
I don't know. It's, is the fourth quarter always something different? That people that maybe if they were slowing down spending, they don't at holiday times because it's just a special time for families. Well, it's just.
I'm not joking, though. It's like we learned through the pandemic that, I think so many people spent so many years, holidays away from their families, usually people who they saw, that they take this stuff really seriously. I mean, we're about to buy airline tickets for our family to go to California. We're not going to miss it, even though airline tickets, it's going to cost us $3,500 to get there and back. That's a lot of money.
That's a lot of money.
That's a lot of money.
3 tickets?
3 tickets, yeah.
All right.
3 tickets.
All right, everybody. As promised, we do have the Mattel CEO, Ynon Kreiz, joining us from El Segundo, California on Zoom. Ynon, let's get Barbie, because I bet she could fix Zoom. Don't you think so? How are you?
Hi, Carol. Hi, Tim. Great to be with you.
It's so great to be with you. I feel like I have a million questions. I feel like I want to go to a bar, have a drink with you, and just sit and talk. I want to start with the Israel-Hamas conflict. You're born in Israel, studied at Tel Aviv University before heading to the West Coast of the United States of America. I hope your family and friends are safe. I pray that they are safe. How are you thinking about all of this right now and this conflict? And is there a way to peace in that region?
Yeah, thank you for asking. My family is okay. My immediate family is okay, but of course, as an Israeli, this is very personal to me, and I know too many people who lost loved ones or have relatives that have been kidnapped and are now being held hostage in Gaza. On behalf of Mattel, we condemn the terrorism and atrocities perpetrated by Hamas and stand against hate and violence in all forms. We express hope for the safety of Israelis and Palestinian children and families caught in the Israeli-Hamas war. As a company, since the Hamas attacks on October 7th, the Mattel Children's Foundation has been focused on humanitarian work, including cash and toy donations to shelters and hospitals to support children who are suffering. And we're sitting here all wishing for a swift resolution to the war and more peaceful times in the future.
Well, and it's something that, people who are, up to 80 years old at this point have dealt with their entire lives in that area of the world. And I'm wondering to you, and not speaking on behalf of Mattel, but just getting your thoughts personally, how this ends, if a two-state outcome is the only solution to ending the conflict there once and for all.
It's a complicated conflict, and we're now sitting at a time that is very volatile. We see risk of escalation, and we just hope for a swift resolution and wishing peace for everybody as soon as we can.
I want to talk about Mattel. I have one more question for you. Do you think Prime Minister Benjamin Netanyahu is not going to be the leader that brings lasting peace?
This is not the time to get into the political discussion. Right now, everyone is focused on resolving the situation. Israel articulated its priorities. We're all really looking forward for the release of the hostages. There are 30 children under the age of 16 that are being held captive right now. About half the hostages are women, and we really believe that this should be resolved as soon as possible, and we pray for the release, safety and release of all the hostages that are now being held captive.
You are absolutely right, but we do appreciate you weighing in on this because we have talked to you about serious issues in the past, so really appreciate this. No easy segue, but I do want to talk about the business of Mattel. Talk to us about last quarter and the outlook. It was a tough day in the equity market for you guys. You did talk about tougher industry conditions. What are those tougher industry conditions that you guys are worried about?
Well, we did see the industry being soft in the third quarter and year to date, and as a result, we adjusted our expectation and believe the industry will decline mid-single digit for the full year. But you need to remember that this is after the industry was up 22% from 2019 to 2022, reaching an all-time high. So coming off after such a strong increase, especially in a challenging macroeconomic environment, we believe that this is a reasonable situation and doesn't reflect on the strength and resilience of the industry long term. The toy industry has been growing for over 10 years, and it's a growth category. So we feel very good about the industry and its growth prospects. And even in that environment, even in a softer market, Mattel performed very strongly. Our quarterly results exceeded expectations. We showed meaningful sales growth and margin expansion with very strong free cash flow in the quarter. We saw consumer demand increasing, and we continue to outpace the industry.
I think a lot of investors today, at least, sending shares down about 7%, were concerned that you guys maintained your full-year sales outlook despite all of the success of the Barbie movie. So what would have to happen, Ynon, to bring in more than the $125 million expected from the Barbie movie and related products? What needs to happen at Mattel or in the industry for that to happen? Or for the consumer, I should say.
Well, while we maintain the top-line expectation, we increased our outlook for a gross margin, for our EPS and EBITDA, and still expect a very strong free cash flow to flow through. What did change is that relative to our initial expectation at the start of the year is that the industry, we believe, will now decline mid-single digit. But the fundamentals are strong. We do expect an accelerated growth rate in the fourth quarter and significant expansion in gross margin compared to the prior year, and for consumer demand to be positive for Mattel in the holiday season, in the fourth quarter, and the full year. So we are performing strongly. We're heading into the fourth quarter, seeing stronger support from retailer, more shelf space, more representation in major holiday catalogs, and overall a strong position with a very broad-based offering of products across play patterns, price points, and we believe we're very well positioned competitively.
So just to follow up there, the $125 million that you put out there, the estimate from the Barbie movie and related products, would you say it might be even conservative a little bit, Ynon?
Well, we did say it's at least $125 million of revenue at 60% operating income margin. But the takeaway from this is that this is one movie in 1 year. And as we continue to scale our strategy and have more movies, more executions, not just in film, but also in television, in location-based entertainment, theme parks, consumer products, digital experiences, music, and other verticals, in some cases that are actually bigger than the toy industry, we believe that we have an opportunity to capture significant value from our franchises. And we're not saying that every movie will be as successful as Barbie, but we absolutely believe that in the aggregate, there's a meaningful opportunity for us.
Well, let's go there. And I've got to say, I remember when we started talking to you, or you was in the early days of the Barbie movie, or you started filming. So it was kind of fun to be along for that process. But it was a movie that made us laugh, made us cry. And like I said, it appealed to a lot of different ages, which was pretty wild. So what are the key brands that you think have life beyond a kid's toy chest, and that you think we should be all kind of waiting for, I don't know, whether it's 6 months, 12 months, the next couple of years, that are going to be brought to life in different ways?
Well, look, the vision of Mattel Films is to collaborate with leading filmmakers to create standout quality movies based on our iconic brands that will resonate in culture and appeal to global audiences. And the Barbie movie, and I'm glad you enjoyed it as much as you did, is a clear showcase.
I did.
And we have
brought me back to the theater for the first time.
Well, I'd love to hear that. And we have 14 other movies in development right now. Different demographics, different genres. We have Hot Wheels in development with J.J. Abrams at Warner Brothers. Matchbox in development with Skydance, which, as you know, produced the Mission Impossible movie that did very well, and Top Gun. We have a movie in development with Vin Diesel around Rock'em Sock'em Robot, Polly Pocket with Lena Dunham and Lily Collins. We have Wishbone in development with Pete Farley, Major Matt Mason with Tom Hanks as star, Thomas the Tank with Mark Forster as director, and the list goes on and on. So we really...
Well, you know, it's very good that you're so close to Hollywood out there. Yeah, it's good that you're so close to Hollywood out there in El Segundo. Hey, we only have about 30 seconds left. I'd love to hear comments on the consumer going into the holiday season. Are you seeing signs of weakness in the consumer?
Well, we expect a strong holiday season for Mattel. We believe our retail partners and the industry as a whole is well prepared for the season. And we're very excited to be able to cater consumers of all ages with a great product for the holiday.
I'm going to get yelled at, but I'm going to ask 20 seconds. What's the hot toy for Christmas and the holidays? And for Hanukkah, what is the hot toy?
Well, anything Barbie is a hot toy, especially even before the holiday for the Spirit Halloween Barbie costume. Watch out for that. But of course, Hot Wheels is always a winner. The basic car assortment and the 5-car pack assortment. And look out for the Monster High $4 assortment and Uno. That will be will be hot selling toys for the holiday season.
God, you're speaking my language. I love Uno, and I love Barbie. Ynon Kreiz, thank you so much. Truly, your friends and your family are on our minds and in our thoughts. Chairman and CEO of Mattel. Let's go back to New York headquarters and get a check on your top business stories with Charlie Pellet.
Very much indeed. Lots of earnings after the close of trading. Lots of big earnings after the close of trading. Amazon now up 1.8%. Those gains are fading, but Amazon did report quarterly revenue that topped analyst estimates. It was boosted by rising sales in retail and cloud computing. Revenue gained 13%, worth repeating, up 13% to $143.1 billion during the 3 months ending September 30th. Analysts on average estimated $141.6 billion. So an Amazon beat after ours. Intel surging more than 6% after predicting a return to sales growth in the fourth quarter, fueled by an improving PC market and a more competitive product line. And Ford said it fell short of third quarter earnings expectations, attacking higher costs and lower quality a day after it won labor peace by giving a 25% wage hike in a new tentative contract with the United Auto Workers Union. Tech giants fell today with the Dow, the S&P, and NASDAQ all declining. S&P down 49, drop there of 1.2%. The NASDAQ Composite Index down 1.8%, down 225 points. Dow Industrials down 251, drop there of 0.8%. 10-year yield 4.84% with a 2-year 5.04%. Lots of economic data this morning. What about the outlook for the U.S. economy and talk of a recession? Jeff Kleintop is Chief Global Investment Strategist at Charles Schwab, and he was a guest right here on Bloomberg Business Week.
I think we are in a cardboard box recession. Manufacturing and trade are in a recession, things we put in a box. If you can't put it in a box, it's not in a recession. I live 3 miles from Walt Disney World. There's no recession at Space Mountain right now. And so I'm a little worried that services slide into a recession and meet where manufacturing is rather than a rapid rebound in manufacturing. So I'm on a watch for that next year.
And you can hear more of that conversation on the Bloomberg Business Week podcast. 10-year yield, as I mentioned, 4.84%. Spot gold up $5.50 the ounce to $19.85, up by about 0.4%. West Texas Intermediate crude down 2.1%, $81.62 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week on this Thursday. So Amazon out with earnings, Intel out with earnings. Dan Morgan is all over it.
Yeah, we got Intel out. As you mentioned, Amazon, Carol, is actually falling now in post-market down. Well, it's flat right now, which is interesting given that shares were bouncing just moments ago.
Yeah, absolutely. They've been bouncing around. Just up about 0.5%. Let's get to Dan. Dan's been all over it. He's had some time to digest some of these results. So let's start with Amazon, Dan. It does feel like some of the mega cap tech names that we've been reporting on in the last week or so, like it's some good news, some questionable news. I don't know. How do you see Amazon?
Yeah, you're right, Carol. It's been a little bit of a mix of both, right? Some good news and some bad news. And Amazon's kind of the same situation. The stock, Tim, as you mentioned, traded up earlier when the numbers first hit because they beat on revenue and EPS. What I was really thought was a big positive in terms of this quarter was operating profit. They came out and basically said that operating profit was $11.2 billion on this third quarter. Street was looking for $7.7 billion, and they guided for the upcoming fourth quarter between $7 and $11 billion. The Street was at $8 billion. So those are really strong numbers. I think what everybody right now is starting to kind of absorb is that range that they gave for revenues in the fourth quarter, 167 to 160 billion, Tim. Midpoint's 163.5. That's below the Street was looking for 166.5. So I think that maybe Amazon is guiding a little bit of caution coming into this upcoming holiday season, and that may be the reason why the stock reversed back and went flat after it ticked up after real strong beats in terms of revenue and EPS.
Well, we're actually getting some commentary from the team right now because the media call did get underway just a little earlier in the afternoon at about 4:30. We should note that Amazon CFO Brian Olsavsky saying that consumers continue to be cautious. Perhaps that's concerning investors a little bit.
Yeah, I think what we're seeing, Tim, is that being reflected in that guidance going forward in terms of the holiday quarter, because that is a little bit light. Also, AWS was a little bit below what the Street was looking for. They came in at $23.059 billion. And that kind of is reflective, Carol, of what we saw earlier in the week. We had Microsoft beating with Azure up 29%, but then we had Google with GCP coming up short, only up 21%. Right.
Well, help me out here as a financial analyst and investor, who looks at these results. When you get a range from Amazon, fourth quarter net sales from 160 to 167 billion, that seems kind of wide to me, but, I'm not as smart as you. Is that a pretty wide hole that gives them a lot of room to play around with, and that's why we get a little nervous? Or is it for a company that's, an over $1 trillion market cap that we need to give it some leeway? Help me out and understand that. It's a it feels like a wide gap.
Yeah, that is a good gap. I mean, I think it allows, Jeff Bezos at Amazon to have some freedom coming into that fourth quarter. I mean, no one can predict 100%, right? Carol and Tim, what your numbers are going to be. Yeah. You're doing the best that you can. You're trying to gauge. Tim made the comment about the consumer being somewhat cautious. So you're trying to get a gauge going into the holiday Christmas season, whether that's going to, spill over into that fourth quarter. So I don't know if we can look that much into it, guys. I mean, I think the Street spends an overabundance amount of time nitpicking everything that, comes out. And again, this is just an estimate, and it's a pretty wide range, like you said, Carol. So I think there's a lot of freedom in there to come in above. And, hey, they beat on the third quarter, right? They beat 143 billion versus 141.5. So, they may be just setting the stage for hopefully a good, strong beat going into the holiday season, because that's their huge season, right?
Yeah.
I did think that, speaking of the holiday season, it was notable that Amazon said that it would hire 250,000 employees in the holiday season.
Doesn't it do that all the time, though?
But that's what I'm wondering, Dan. Is that a big number for Amazon? Is that typical? Did that surprise you? 250,000 seasonal employees in the U.S.
Yeah, you're right, Tim. And, they've just gone through a process of kind of right-sizing the right amount of employees after COVID. They had a huge spike up, as you guys know, covering Amazon all this time. During the COVID pandemic, unprecedented amount of people were using Amazon as they were using Netflix. And they had to hire all these people and build things out. And then all of a sudden, the demand dropped off. So they had to kind of pull back, let people go, kind of get their fulfillment, centers in line with overall demand. So now you're getting this spike up, like you said, Tim, as they prepare for the holiday season. And this isn't overly unusual for them to hire that many seasonal employees. Bear in mind, FedEx and UPS are all doing the same thing.
Hey, one thing I want to ask you before we flip over to Intel. Andy Jassy, as our team writes on our live blog right now, breaking down Amazon, known inside the company for being relentlessly focused on the company's checkbook. For many teams, travel and hiring are still curtailed almost a year after the company's first big layoffs began. So that effort paying off, sales and marketing spending down year over year, a first in data since at least 2015. Tech and infrastructure spending, the rate of that growth, we're talking about engineers' salaries, others working in R&D with physical goods such as servers grew by 8.8%, just a quarter of the rate a year ago. So it sounds like they're also being very meticulous when it comes to the cost side of the business.
Well, you're right, Carol. You're seeing a little bit of alphabet coming into Amazon, right? When we look at cost consciousness, right? Which is unheard of 5 years ago. Right?
A little meta, too. Right, a little meta year of efficiencies.
Coming into our Amazon numbers. But you're right, Carol, because that really came through. I mentioned that operating profit number. That was a huge beat, $11.2 billion. Street was at $7.71 billion. Bear in mind, AWS, even though it only grew 12%, it's $6.9 billion in operating profit. That represented 62% of the total operating profit for the entire Amazon parent company. So even though Amazon came up a little bit short in terms of expectations, AWS came up a little bit short. Still a huge part of that operating profit expansion and cost-cutting story for Amazon.
I will say Amazon has always held its purse strings pretty tight. I mean, this is a place where Jeff Bezos was using desks bought from Home Depot that were old doors for years. So Amazon has never spent a lot of money internally.
That.
Yeah, never spent a lot of money internally trying to pass all those savings on to consumers.
Should we talk Intel?
Let's talk Intel, because shares of Intel right now are surging in the after hours, up 5.4%. The company predicted a return to sales growth in the fourth quarter, fueled by an improving PC market and a more competitive product line. Dan, your takeaways from Intel?
Yeah, Intel was actually a really good number, Tim. They, of course, beat on revenue and EPS. Client computing group came in at $7.8 billion. That was above the street, which was at $7.38 billion. So we're starting to see a change up here with Intel, right, guys? Before, they were getting beaten data center by NVIDIA and AMD, and then in the PC space, they were getting beat by AMD. And it looks like things are starting to turn around a little bit, because the guidance that they gave for the fourth quarter, 14.6 to 15.6 billion, that's versus an estimate of 14.35. That was consensus estimate on revenues. That's a huge guide up in the fourth quarter. So this gives us evidence, Tim, that the turnaround is intact. We know that Intel is going through a transition. They're trying to become a foundry. They're trying to compete better in the AI space with, companies like NVIDIA. So a lot of things happening with Intel, but this gives Intel bulls evidence that turnaround is intact, and they're starting to see a light at the end of the tunnel.
Is there a number one question, 20 seconds, very quickly, Dan, that you'd ask Pat Gelsinger? Just very quickly.
Yeah, really quick, Carol. I think, again, more color on what they're doing in the AI space. We know that they have the Falcon Shores GPU chip coming out in 25. That's going to be a huge growth area for them as they try to compete against NVIDIA and AMD.
You take a cue so well. Dan Morgan, we love you. Thank you so much. Dan Morgan, of course, Senior Portfolio Manager at Synovus Trust. Intel shares up almost 6% in the aftermarket. All right, folks, we're coming back here on Bloomberg Business Week. Carol Massar, Tim Stenovic. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pell at Amazon.com, out with revenue and profit that topped analyst estimates, boosted by rising sales in its retail unit and significant cost cutting. Shares right now well off session highs after hours. Right now, Amazon is up by about 0.8%. Dan Morgan is with Synovus Trust, and he was a guest moments ago right here on Bloomberg Business Week.
I think that maybe Amazon is guiding a little bit of caution coming into this upcoming holiday season, and that may be the reason why the stock reversed back and went flat after it ticked up after real strong beats in terms of revenue and EPS.
And Intel is surging at late trading after predicting a return to sales growth in the fourth quarter, fueled by an improving PC market and a more competitive product line. After hours, we got Intel up now by about 6.5%. Morgan Stanley's incoming CEO, Ted Pick, says investment banking will lead the next business cycle and that hiring for that business will help the firm compete with rivals. Pick made the comment today in an interview with Bloomberg's Shonali Basak.
Morgan Stanley was the first place that I worked out of college. And 33 years later, I'm sitting next to Mr. James Gorman. It's the thrill of a lifetime. I'm so excited.
And today we did see Morgan Stanley shares advance by 0.9%. This on a day when the rest of the market did move lower. MasterCard reported an increase in third quarter spending as consumers continued to defy analysts' expectations amid rising rates. And those are our top company stories at this hour. And this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you okay?
I'm okay.
We're just trying to keep up with earnings.
Wi-Fi's going out. Pets' heads are falling off. It's just chaos here. No, it's all good. We're good. We're having a good time.
Not so good for Ford, missing on its profit outlook and pulling its 2023 outlook. We know what's going on. So the company coming out saying it fell short of third quarter earnings expectations, attacking higher costs and lower quality a day after it won labor peace by giving a 25% wage hike in a new tentative contract with United Auto Workers. So that's been the good news, kind of getting that taken care of. But again, the company withdrew its full year outlook. No surprise, right, because of this.
Yeah, shares right now down about 5% in the aftermarket. The company posted adjusted earnings per share of 39 cents. That's below the 47 cents that analysts estimated on average. Ford's revenue in the third quarter coming in at $43.8 billion. That is better than the $41 billion that analysts expected. We did hear Jim Farley in a statement noting that it was, quote, radically changing how we work. The company is radically changing how we work in order to deal with unspecified costs and quality issues. What does that mean, Carol? Cost and quality issues. That's interesting. I mean,
what are you changing?
What are the quality issues?
Yeah, I don't know.
That's concerning.
Yeah. 6-week strike, though. This is the good news, right? You know, whenever there's any kind of a strike or legal overhang, any kind of overhang on a company, right, it just kind of drags them down in the mind. Any kind of overhang on a company, right, it just kind of drags them down in the minds of investors. So to get that done is a good thing. But Ford is pulling its forecast of adjusted earnings before interest and taxes in a range of 11 to 12 billion. We talked about this, which it had boosted in July, so not such a long time ago. And then you've got GM, which still hasn't settled with the UAW, likewise suspended its 2023 guidance. So we've seen this.
We saw that earlier this week, so not too surprising, I think. 7.7% increase in U.S. vehicle sales in the quarter.
Yep.
Strong pricing that helped bolster Ford's performance from its traditional internal combustion engine models, like the Bronco SUV. That thing's pretty cool. Have you seen the new Bronco? It's cool.
Did I see it?
You've seen it. I think you've seen it.
Have I seen it?
I hope you've seen it. It's all over.
I don't know if I've
They're
seen
pretty
it.
cool.
Okay.
The F-150 pickup as well. The unit is known as Ford Blue, saw third quarter earnings before interest and taxes of $1.72 billion. That's below analyst average forecast of $1.94 billion.
I was talking with an Uber driver who was driving a Tesla, and I was like, like it.
Did you get one here?
It was an SUV.
Nice.
It was kind of interesting and stuff. And I was talking about the other folks that are doing, EVs. And he's like, well, they can't make money. Elon's making money. What's interesting, Ford's struggles in that nascent EV business of theirs, known as Model E, resulted in a loss before interest and taxes of $1.33 billion, $1.33 billion, more than the $1.27 billion loss that analysts were forecasting. Their signature EV, that F-150 Lightning, plunged 46%
Wow.
in the quarter as the company shut its factory for expansion, delayed delivery of trucks for quality checks, and temporarily laid off workers at the plant for what the company called multiple constraints.
If you listened to our interview
I
with Kevin
want
Tynan a
more
couple
on
weeks
this,
ago
right?
from Bloomberg Intelligence,
Yeah.
you wouldn't be surprised by that 46% figure.
Right.
Bloomberg